Hey guys, Andy here. Energy's broken out, and in this episode, Dennis and I discuss why it's broken out, why we love this sector so much, and what equities we are currently trading and investing in. If you stay to the end, you also see what sector we see that is about to break out next. Hey Dennis, how's it going?
Great, Andy. How are you? Good to see you.
So let's talk about energy here. The oil markets, since we've talked about it and recommended it, which has been about 6 to 8 weeks ago, has really been on a great run here in July. So we've had a good 4 weeks. Tell me your thoughts about it and what's going on.
Yeah, well, let's put pat ourselves on the back. We were right about this one. We picked it up at the right price. We talked about the support lines where the crude oil was, and where the energy equities were. It was a right time to get in. And we got in the right time. If you recall, we talked about XOP, one of the major energy ETFs, when it was trading around 120, and right now it's 140. Basically, in a couple of months, it's over 15% return, and it really broke out. You look at the charts; it's looking good. I think it's just the beginning. Even if crude oil doesn't go up much, let's say consolidates and stays at the same level, I'm not expecting much of a downside other than just usual volatility here and there. I think energy equities are going to continue to outperform the market. I think it's a hot sector for good reasons. Now, technically, it's looking really good. The PEs it's cheap. It's still cheap, even
When
after
we
this.
talked about not to interrupt you, but let's talk about a hot sector. I think you're right, 100%. I think it's a hot sector, but it's nobody knows that it's hot, if that makes sense.
That's true because
So
everybody's talking about AI and
exactly, exactly.
everything.
So this is still under the radar, but
Oh,
it's hot. But go ahead. Go ahead.
yeah, it's just it is. You're completely right. Nobody talks about it. I mean, if you turn the CNBC on, maybe somebody mentions it, but overall, it's quietly doing great.
Right.
Again, I think it's just the beginning. It had a great run in 2022. Then it kind of got forgotten because of
It got
NAS.
killed.
It got quite a bit of a correction, which I did not expect back
I
then.
didn't expect I expected to pull back, but that was that was falling on, a bunch of swords there. It was bad.
Right, right. It's just money went to the hottest thing in the world, AI.
Right.
Okay, that's, I guess, understandable. But now that Nasdaq is a little overbought, it's still fine, but it's overbought. And I like what's going on in the market with rotations, and the money is finding the value, and they're finding value in energy. And that's where value is. I mean, look at the PEs. It's still, I looked at the average PE on XOP and XLE. That's like six. And
Yeah.
six.
It's
I mean, and
it's ridiculously cheap still.
it's still cheap. Yeah,
Still cheap.
it can go up another 50%. It'll be still fairly valued.
Yes. So
So,
let's talk about that, and then you're gonna show us some charts though. But let's talk about oil's broken out. Why did it break out? It looks like that broke out just pretty much on just supply constraints. Now we had Saudi 6, 8 weeks ago said, they're going to start tightening more. They're going to go this alone. And it looks like I was reading some reports that looks like they're going to extend this cut that they're doing alone, along with OPEC.
right.
Uh, I was looking at inventory reports last week, and the oil report was okay. That was higher than expected, but the gasoline draw was really low.
Yep.
So that means this week, you're probably going to have a big draw on oil inventory. So it looks like supply constraints are finally kicking in. What's your 2 cents?
Most likely, yes. I mean, I attribute it to not just what you mentioned, you're absolutely correct, but the economy in general, which was a few months ago, we were thinking of a recession, hard landing, soft landing, and the economy is doing okay. It's not doing great, but it's doing fine. So I think the oil pullback, or that major correction that it had, was based on fears that the economic activity would slow down and therefore demand would diminish. Right now, people are realizing that the economy is still doing okay and the demand is still there and it's actually not going down at all. And we have, like you mentioned, supply constraints. And it just came to traders came to realize that, I mean, oil has nowhere to go but up. And therefore, we had a beautiful run. I, and even if it stops here, stops meaning
Takes a
consolidate.
pause.
Yeah, takes a pause, exactly. So I think longer term oil, it's still on its way to 100 or above.
Mhm.
I'm not saying that it's going to happen over the next few months, but I think it's going to be higher on the second part of the year,
Yeah.
regardless of what the overall market is doing. And as I mentioned before, I love oil energy equities even more than I like the commodity itself.
So do I. So show us some charts, if you would, about
Yeah,
some of the
let me,
equities that are looking at.
that's a chart of COP. I look, first of all, I looked at fundamentals, obviously. Well, sometimes when you pick a stock in any sector, there is it's called a 60-30-10 rule, meaning 60% chance that the stock is going up. It depends on the market. 30% it depends on the sector, and only 10% it depends on the stock. So that's why I usually use top down approach than bottom up. I like the market in general, which is, it's fine. I absolutely love the sector. So that's 30, 60 and 30%. And then the 10% you pick a stock.
Right.
And I think this one popped up. First of all, well, they're paying good dividends. They're growing like crazy. They're cheap. And I usually like to see how they react, how traders react to earnings, not necessarily earnings themselves. And earnings are great. I mean, and every time I look at them, they react positively. They look every time the reaction is what we would like to see. So not the initial one, but in general. And then you look at technicals, and they were sitting just like XOP. They were sitting at their support line, and they started to rally. And I think they have a lot of room to go up, at least to 130, 140. Right now, I believe they're trading at 115. I think it's going a lot higher. The volatility is really cheap, so you can pick up options. You can just simply buy calls.
How far out would you go with your calls
End of the year.
end
I-
of the year?
I'm thinking that, just like you mentioned, that energy in general will do very well over the next 3 to 5 months. I think
Yeah.
that's a sector to be in. And I think COP is a major part of that.
Got
So
it. What
that's
I
just,
like about this trade, what I like about ConocoPhillips is that it's such a big name.
yes.
And usually what happens, rule of thumb, is when a sector like this breaks out, yeah, the big names get the money first. So
Correct.
you're going to see the big funds picking up the big names, and then they're going to go to the smaller names or the smaller caps, if you would. Another reason I like this trade is it's really hard to lose because, again, you can just hold the stock and you can keep on the dividend. You just keep the dividend.
Yeah,
Uh, if you have 100 shares or more, you can write calls on it, which I also love. So if, if I really like stock, if I'm trading stock, I really like stock that I can sell options against. Again, it's just another income stream for me. So,
absolutely.
um,
Yeah. Every time it gets overbought, if you hold the stock, absolutely fine to sell some out of the money calls against and collect some. It's sort of like an additional dividend.
exactly.
Okay. And if you take out, so be it. That's fine.
These are a couple of things that I'm looking at right here. This is an energy trust. Why I like energy trusts, if you would. This is we'll go to a 1 year chart on this.
Mhm.
And I'm just using something archaic like Yahoo Finance. But
Mhm.
this is like, again, we're looking at a breakout here. This is the ticker is BPT, Prudhoe Bay Royalty Trust.
Mhm.
Um, these guys pay a dividend typically. They missed their last two dividend payments. The reason they missed the last two dividend payments, their cost to produce oil. Oil needs to be above $80 a barrel.
Okay.
If it is above $80 a barrel, these guys pay a really fat dividend. Well, where are we right now? $80 a barrel. So I believe we're going much higher. So this is a leveraged, if you get, it's going to give me a lot of leverage on the equities play. So if we go, let's say to 90 to 100, this stock will probably double more than likely.
Oh yeah.
It'll also collect the dividend. Now, if it doesn't go that, if it doesn't go above 80, if we just, which I obviously think we will, this stock is going to go nowhere. It's going to sell off. And if oil crashes, the stock's going to sell off considerably. So buyers beware. But I'm playing the leverage on this. Another one that I'm playing is VOC. I want to say this is also an energy trust. You'll also see their breakout here. What I like about VOC is their cost is around $70 a barrel. So they're printing money right now with $80 a barrel. Just imagine if oil energy is above 100, 120, these dividends are going to be really
Yeah.
fat. In fact, I'll show you right here. This is last year when we had a big spike up in energy, and this is when they started paying their dividend.
Oh yeah.
They went way up in these big dividend payments. So you're looking at a consolidation right here. And then if oil continues to run or even stay flat, this stock is more than likely really going to move.
Yeah,
So,
it's a bullish looking chart. I mean, you see a resistance at $10, kind of like you mentioned. And
mhm,
I think at least it's
right
going to
here.
$10, and then that's 10% from here or more.
Yeah.
And if it breaks 10, it can run.
Yeah.
Well,
I agree. So, and then funds will probably start picking it up right in here as I guess this thing breaks 10 and oil's, let's say 90, 90 plus, which is not only about another 8 or 9% higher. Oh,
but,
10% higher. This thing's gonna run. So that's my energy play.
you know,
Any
it's
other thoughts on energy and how to play it and how to play it throughout the end of the year?
I just stay long if you're just an equity trader investor. If you don't want to pick anything, then stay with major ETFs like XLE, XOP, and OIH.
Mhm.
I think they're wonderful.
And they're all optionable, if I might add. I
Oh
believe
yeah,
so.
absolutely. Very
Mhm.
liquid. Options are very liquid. You can come up with bullish strategies depending how aggressive you are. I wouldn't chase. I never chase anything. You
Yeah.
see down days here and there, consolidation, pick it up.
Right. I
When
wouldn't
you-
chase, and also you're not too late. I mean, we got in, I think, towards the bottom, but we're having a breakout right now. So if you don't have any exposure, I don't, you're not too late. Just wait for a pullback. So,
Absolutely.
yeah.
Completely agree. If you don't have any exposure to oil, it's not too late at all. Unless it gets really overbought, don't chase it. But if it's not, just pick it up, pick your spots, whether with option strategies or just buy them, or whether you sell puts, buy calls, do some spreads. I still love energy. I think it's going to continue to be the hot sector, not hot sector, but under under the radar, like we said, sector. It's going to
Yeah.
do well. It looks really good on the charts. It's cheap. And the crude oil, I see no problems with the commodity whatsoever, other than a few down days here and there. And I think it's going higher, or at least stays at the same level. So this is a sector to be still.
Excellent. Well, talk to me, Dennis, about, let's transition here. Talk to me a little bit about the gold and silver market or the precious metals market here. What are you seeing?
They've been consolidating, doing nothing, and that's kind of what we talked about. I'm still bullish. Pretty much always a longer term bull on gold. I think seasonality is going to favor gold. Usually starts in August, September, when gold and gold stocks start doing better. I think it's consolidating. It's more of a bullish consolidation. Depends on what's going to happen with inflation and interest rates. People are still concerned about it, and for good reasons. I think that when the overall stock market is getting overbought, it will get a little bit more questionable. Right now, it's still bullish. There will be more interest in gold, and that should come in shortly. So I'm not saying that stock market's going to go down. I'm not bearish in stocks at the moment, but I think because of the sector rotations and generally what's going on, which is a very healthy thing, just like energy was out of favor a few months ago, now they're in favor. Gold is going to transition to being in favor at the moment. Whether you played on the bullish side, I'm not as bullish on gold as I'm on energy stocks, but I'm still very, very positive. And the trade that I'm looking for and what I would like to put in next next week is a neutral trade when you long gold or gold stocks versus something else. And I'm looking at home builders ETF, which ran like crazy, and it's incredibly overbought. I can show you the chart. This is a home builders ETF. See how overbought it is. It's basically challenging all-time highs that were a year and a half ago. So that's where we're at, almost exactly the same. It's very overbought. It's overbuilt, pun intended. Interest rates is still pretty high. I don't think it's going to go much higher. I think it's getting ready for a pause.
Yeah, I would agree. Just so for our listeners as well, this is a very interest rate sensitive sector, if you would. And what did the
Exactly.
Fed do? So,
Exactly. Very cyclical, very interest rate sensitive. And I think it's overdone. I think it did much better than people expected. And it might break the highs, but it's not going to go much higher. At the same time, if we look at ETFs for gold equities, it's GGX. Well, it's been going nowhere lately, so but it's still looking fine. And then what I would like to show you is a chart between two of them. So the GDX, which is the gold equities ETF, is on top. Home builders are in the middle, and the blue line at the bottom is one divided by the other. So it's relative one against the other. And right now it's kind of sitting, let's assume this is a support line. That's what had happened. This is a chart going back a few months, actually a few years. So that's where it is. What we're trying to do is going long one and short the other. Essentially, it's a market typical hedge fund market neutral trade. I'm not saying that GDX will go up and XHP would go down. That would be an ideal scenario. That would be great. Usually doesn't happen. They're somewhat correlated, but not much. It's basically a relative trade. I believe that one will do better than the other. Whether it's both going to go up or both going to go down, I'm just comparing those two. So it's total market neutrality. The way you do it in a dollar neutral manner. So one is trading, I think it's $30, another one is at 84. So just the ratio of the shares should 30 to 84 or roughly, and roughly 3 to 1, depends on how much money you're working with and so on. I think it's a good entry point. I think that XHB is getting overbought and will go nowhere or down. And the chances are that gold stocks are going to go nowhere or up. So that's the trade that I would do. You can do it with options. Both
uh,
ETF are highly liquid, or you can just do it straight. I'm probably going to do it straight with equities, just being long a GDX and short XHB on a relative matter. And I think you can pick up at least 10% relative terms.
very
Meaning,
quick.
for example, one goes up 15%, the other one goes up 5. You capture the difference of 10, or the same thing on the downside. So that's what I'm looking at. I'm not going long gold. I have some exposure, but I'll wait a little bit. I'll pick up my spots. But I think that relative trade, it looks interesting to me.
Uh,
And it's like it's going to pay off. So
Right. Yeah, I would agree. I think we're a couple of weeks out, but I'll probably start. Well, I will be starting to accumulating equities here in August, and I'll just start averaging in. I'll start with some of the bigger players like the Barrick Golds, the Newmonts, if you would, and then
yeah,
I'll go to mid levels, and then I'm going to pick up a bunch of juniors just because they're so cheap right now.
yeah.
So that's my plan, my strategy. Okay. Well, thank you so much, Dennis. We do appreciate it. And we'll see you next week.
Always a pleasure, Angie. Thank you so much.
You bet.